This is going to be the first video in a series of videos that will last the duration of the PriceBob price action thread at Forex Factory. The name of that thread is the PriceBob strategy. And in this particular series, I'm going to be discussing price action concepts that I've learned primarily from being a student of Al Brooks's video trading course. Again, a reminder, I am not an affiliate. I am not associated in any way with Al Brooks or his business, other than I'm a customer who has bought his trading course, and I am 100% satisfied with the quality and content of that course, and I recommend it to anyone who has an interest in learning to become better readers of price action, especially on the 5-minute chart of the S&P E-mini. Okay, so having said that, this particular video, I'm going to look at II, which is inside, IOI, inside bar, outside bar, inside bar, and OII, which is outside bar, inside bar, and another inside bar. In Al Brooks's terminology, these three patterns equal BOM. BOM equals breakout mode. And I wanted to put this down here. This is a point that Al Brooks makes frequently. If price action forms a pattern that looks like a setup, then traders can expect price will tend to act like that pattern, even if the pattern isn't perfect. This may not be the exact quote from Brooks, but it's real close, and the meaning is 100% on point. And I chose, this is actually from this Friday, I believe, and I chose this chart for this introduction because here we have what at first blush looks like an inside, outside, inside. This bar looks like it's inside of this bar, and this bar looks as though it's outside of both this bar and this bar. That would create breakout mode. If you were to actually look at the prices, though, the low of this bar is 28 3/4. The low of this bar is 29. So it's not technically IOI because by the letter of the law, this middle bar, the range of this bar, the low would have needed to have been exactly equal to this low or lower to qualify as an outside bar. So for Al Brooks price action, if this bar and this bar had equal lows, and this bar made a higher high, this would be outside of this bar. But strictly speaking, it's not an outside bar, but the fact that it looks very much like an IOI pattern, we should anticipate that it would possibly act the same way. And in this case, you would have put a buy stop below the low of this bar, sell stop above the high, sell stop was filled, you're short, and you had a decline. And as anyone knows, I'm typically just looking for a 10-point profit. I'm not trying to catch swings. It should be noted that Al Brooks advocates that retail traders attempt to swing at least part of their position. So maybe he would tell me, Vidvad, it's great that you're getting these 10-point profits right now, but you really should maybe take 10 points on half of your position and let the other half run for a 2R or better profit. Okay, we'll get there eventually. Anyway, so I want to make that point. So what I'm going to do is I'm going to go to Monday of this past week and just go through and show a few of these patterns that did present themselves to us. So the first one and only one on Monday actually is this is an OII. And again, for Brooks, someone might be watching this and saying, Vidvat, that's not an outside bar. It fell below the low of this bar. The high is below the high. So for Brooks, we're looking for breakout mode. We're basically looking, actually, let me do this. I saved a few slides from this section of his course. This is not Al Brooks's complete presentation on this, but you can see IOI, you can see these little tight trading ranges, IOI. Interestingly, Al Brooks does use a 20-period exponential moving average. He's a price action trader, but he uses this one particular indicator. I'm not opposed to it at all. I'm not using it currently, but I'm remaining cognizant of it because it could be something that we want to add as we start refining our marriage of MeBob to price action. So here, again, you can see his use of the moving average. You see another IOI. This one's in a bear trend. Pull back to the moving average. We can always talk about doji's lower probabilities, but small bear. That's neither here nor there. What really matters to us is here we have an IOI. Buy stop above, sell stop below. In this case, you are in a bear trend, so I would recommend sell stop below, not buy stop above the high. There are going to be times where you bracket that inside bar as a long or short entry potential, and then there's going to be other times where you're going to see context is it's probably preparation for a continuation of an existing trend. Again, had the same thing here. Here we had an OII, breakout mode continued down. And then finally, any 2 to 5 tight trading range. If you take Brooks's course, TTR is a abbreviation for tight trading range. So any 2 to 5 bar tight trading range with small bars, you're in breakout mode. Again, he says this is a daily chart. Doesn't matter. You'll see this. If he didn't say this was a daily chart, this could have been a 5-minute chart, a 1-minute chart, a 1-hour chart. I believe this is actually a 4-hour chart over here. But anyway, it's a good course. Not trying to give anything away. Hopefully, Al Brooks won't be mad at me for sharing a few slides. If anything, this should encourage you to look into perhaps becoming a student of Al Brooks's trading course as well. Okay, so back to the chart. We had OII. When you see the arrow, the direction is going to indicate the direction that the trade was filled, and it's going to be over this, what I call the signal bar. So this bar closes, OII. I'm putting a sell stop below the low. Market is in a downtrend from the open. Opening range high, sell down, 2 legs back to the previous week's low, previous day's low, continuation. So it's sort of a little bear flag almost coming down. And that's the only one that we have on Monday. But the breakout mode is going to be a concept that I'm going to be adding to the MeBob method. It's going to become part of the PriceBob method, I should say. So let's go to Tuesday. And on this particular chart, this red line indicates when I would not take any additional setups. So this is 5. This bar here closes at 3:30. So this opens at 3:30, and I wouldn't take any additional trades. And if I'm in a trade, I'm looking to close it out, wrap it up. That's different from the MeBob template, where this red line indicates noon, which is when, for me, the MeBob range is going to become no longer something I'm looking at. All right, so Tuesday market, we have an OII. Yeah, the first inside bar happened to be the MeBob. This was a day where MeBob gave us a profit, sold down here when this bar closed below the low of the MeBob range. However, since we had an outside, inside, could have put a sell stop below the low here. And that was an appropriate entry. If you were looking for 10 points, you would have made your 10 points there. In this case, you probably would have targeted the previous day's low, which would have been almost a 20-point profit. Then we had an IOI, bull breakout bar. This is sort of a bull flag right here. Pull back, tried to go up, pull back, and then this is the continuation. IOI, buy stop above here. You would have purchased at 600.5. Current open was at 9. You would have made your 10 points. If you had taken your profit at 9, that would have been fine. I will be doing another video, I'm hoping tomorrow, on these pivotal areas and how we need to start being aware of them. Down here, we're in a downtrend. We have an IOI, but this or that. So this is not only inside this is inside here. We have a bull bar closing near its high. This is one of those cases where sell stop below would have still been fine. Market could have made significantly lower lows, and buy stop above. I would have taken 10-point profit. Obviously, this was the low of the day, and a swing trader potentially could have made significant profits over 100 points from. Let me see, did it get over 100? You would have bought at 44.75. Close. 99 S&P points from the entry to the high. I wish I could hold for that, but I'm just not there. Let's go to Wednesday. Okay. IOI, breakout mode, below the open. But you have these tails, so this is a situation where I would have said sell stop below, buy stop above, and take the breakout. Had they been able to break above this high, odds would have shifted toward at least a retest of the day's open. But being in a downtrend, the break of this low certainly gave you decent odds of filling this gap, and obviously it went quite a bit farther. Strong rally, IOI. Would have rather this had been a green bar, but in either event, my thoughts are this is one of those cases, buy stop above, sell stop below. We have a significant sell-off, strong sell-off. Have the IOI up here. It's retraced about half of this downtrend. No telling whether it was more likely at this point that the downtrend resumes or the uptrend carries on. In this case, the uptrend carried on. Would have made your 10 points. Again, if someone's maybe even would have had a 2R, your risk. Yeah, so I would have taken my profit. It would have been just a little bit above a 1-to-1, but if you had held for a 2-to-1, you would have made that as well, almost a 20-point profit. And then again here we have big bar. It's not inside this bar. What's it inside? It's inside this subsequent bar. That's how these breakout modes work. So we don't know this is an inside until this bar goes outside. Once this bar goes outside, we have an IO. And this is an inside bar. And again, this is a situation where I think context is we have a double top, bear flag, so sell, retrace, double top, no telling whether. So this whole thing could be a two-leg pullback, and the market might want to try to continue. Could be a trading range, so we have a bear leg in a trading range, maybe anticipating a bull leg. What I'm trying to say is this is the type of context, again, I'm putting a buy stop above the high, sell stop below the low. In this case, the buy stop was filled, would have made your 10 points. Risk on this. And the risk on this, I'm typically doing the inside bar. So again, you could have gone for a 2R profit on that. Some people might put their stop loss below this low and still made it to a 2R on that. So let's go to Thursday. Thursday, strong sell-off. 1 push, 2 push, 3 push, possible bottoming, but it fails to continue to rally above the previous day's low. Resumption, I. This is a case where it's actually an OII. I thought I had the O there. So OII. This is one of those cases where we now have tried 1, 2, 3 times to get back above the previous day's low. I'm not interested in putting a buy stop above here. I would have done a sell stop below here. If this had been a stronger rally and then little pullback or pause, then maybe I'd be buy stopping above. But not expecting anything but a continuation lower here. And boy, I did a bad job on for some reason not putting the so again, this is not an outside bar until this bar closes inside, and then again it's a breakout mode. In outside bar, it's not meant to indicate that it was outside of something previous. So OII. Again, in this case, I'm really looking more for a sell stop below. Wouldn't place a buy stop above. My fill would have been at 18 3/4. The low was 9 1/4. I would not have gotten to 10, but we got this close. Probably going to get stopped out at 14.75. So 4-point profit instead of a 10-point profit. And then we got a pretty strong bull bar, inside bar, so OI, but strong bull bar, 3 big bull trend bars. This becomes an outside bar when this closes inside. This closes inside of this, so we have an OII. I would have put a buy stop above and a sell stop below. I think you can see the different context from this OII and this OII. In these cases, I would have put a sell stop below, but I would not have been looking to buy a reversal attempt up. Whereas this, so now you have another push down, push down, push down. So you have 3 attempts down, followed by a pretty strong rally. Green trend bars closing at least in the upper half to upper third of the range. OII, I'd buy here. Again, I'm looking for 10 points. If someone were using the inside bar as their risk, would not have quite made it to the 2R target. Now, finally, we get to Friday. Again, MeBob range here. I actually sold short here. Maybe it was filled a little lower than the close. I did check. So this bar was the MeBob short entry followed by an inside bar. So we have an OI, but this bar broke down traded below the day's open, and then closed up. So it broke below the inside bar, then reversed through the high. So for MeBob purposes, if you watched the live trading video, I mentioned this. I'm going to be using this from now on as my sell stop. I'm actually going to be much more cautious to maybe even go to break even. If, again, we had one attempt below the day's open, a second failed attempt to take it lower, and here's a third attempt. So I'm going to be incorporating some price action into my stop management for MeBob trades this coming week. And then we have an I buy stop above. I would not be putting a sell stop below because I'm still working MeBob at this point. So if I'm going to get short here, I would want another close below the MeBob bar low. And I'm not going to do it on an inside bar. I got I. I'm not selling the close. Maybe a buy stop below. A sell stop below. But certainly would have put a buy stop above. And you can see that really this was the low of the day. And this IOI would have gotten a swing trader in for a nice profit. I'm not that trader. Again, roughly speaking, a 10-point profit would have been exactly 1R. Even if I were one to go for a 2R target, I probably would have put my take profit order at that magenta line or pink line and taken my profit there. And then let's just scooch to the end. Now this is one, the reason this is a red O with this, it's actually a 0, right? It's a /0. This is from the first slide that I opened the video with. It looks like an IOI. Technically, strictly speaking, the low of this bar was above the low of this. So it is not, strictly speaking, IOI, but we can expect it to behave like an IOI. And so in this case, I think it would have been appropriate. You have a double top here, but I think it's appropriate to buy above this, buy stop a tick above here, sell stop a tick below here. And then the last thing I'm going to show you, I'm going to wrap this up, is I prepared a chart to sort of show where we are ultimately going to be heading in terms of adding Al Brooks' price action concepts to the MeBob trading plan. And again, this is going to be getting ahead of ourselves, but just to show what it will look like, this is where we're going. So here, strong gap up is a gap and go. I don't know if Al Brooks calls it that. I don't know if he might talk about opening range breaks, but I don't know. Years ago, someone called this a gap and go, so I sort of adopted it. And that's when you get a gap up, bracket the high and low of the first 5-minute bar, and then you have a reversal bar. I wouldn't sell at the previous day's high, but when this bear bar closed below the low of this bar, that's a sell. I would have targeted, again, probably the open of the day, maybe the low. MeBob range, I'm just going to draw the MeBob range from that one, from MeBob to noon. I'll take MeBob trades during this period. I'm going to do MeBob in the morning, and if I'm trading in the afternoon, I'm going to revert more to a Al Brooks price action. Up here we have a lower high. So this high is a little lower than this high, and it's what Brooks would call a micro double top. A micro double top or micro double bottom or a micro wedge is going to be where the double top is maybe 2 to 4 bars, 2 to 5 bars, sort of like his 2 to 5 bar tight trading range is breakout mode. 2 to 5 bars at a high or at a low is going to be a micro double top, pulled back to his moving average. That's he uses the 20. This is actually a 21. I don't think there's any difference whatsoever. It's just I was always a 21 moving average guy, and even when I got his video course and saw him using the 20, I stuck with the 21. Just not any, there's no difference. You're going to get the same setups. So use whatever you want. Anything 18, 20, 21, whatever. So micro double top, this is your sell signal bar. Enter on this bar. Again, I'm looking for 10 points. Some might be looking, if you're going to go short here, or you're in an uptrend, scalp, use the moving average as a target. For Al Brooks, this would be an H1. This is an H1 is simply the first bar that makes a higher high than the preceding bar. So this is your signal. This would be your entry. I don't typically trade H1s. This would be your H2. This is going to be, so this came down, this is your signal bar. And basically what you're doing is, if you're going to trade H1s, you'd be doing buy stop, buy stop, buy stop. You're just moving your buy stop down until your buy stop is triggered and you're long. If you're doing just H2s, you would not be entering buy stops here. Once this bar made a higher high than this, you're looking to see if we get a micro double bottom, and then you would put a buy stop above here, buy stop above here, and you're long. Tight bear channel in an uptrend, most likely it's a form of a bull flag. So here's your double top. So topped here, pulled back. This again, it didn't drop far. Still a double top. A double top is just the market makes an attempt at a new high, and that can come in the form of a higher high double top, such as this. It could be exactly even double top, or it could be a lower high double top. But this is a double top. You can see we're probably 10 or 12 bars or more between those two peaks. Micro double top, just 2-3 bars separating the attempts higher. Here's a double bottom, came down. So if this had been the bottom and it rallied, this would have been a micro double bottom. It's just semantics, folks. So came probably a bull flag, tight bear channel, but not a bear channel in a downtrend. Then we had, and this is an H1, this is an H2. If you had done an H2 here, would have gotten stopped out below this low. Your initial stop is down here, but this is bad follow through. Again, if you were to get Al Brooks's course and you listen to Al Brooks's course, you can almost hear Al Brooks talking in your head as you're watching price action if you really put the effort into studying his course. Double bottom, 3 strong bars up, pull back to the moving average. I know Brooks traders who they'll buy at the moving average. They'll keep a fairly large stop loss below the last swing low, and they'll scalp off that moving average, longs and shorts if we're in a downtrend. And here we have, now this is the MeBob chart. So this is the end of MeBob. I'm going to be adding a colored region for right here. So I would not have taken this, but again, tight bear channel. Tight bear channels and uptrends are usually bull flags. So you could have had a buy stop above the high, buy stop above the high. Here you have an OI, but would not be recommended to put a sell stop here. Market's clearly just in a trading range, consolidating like it wants to go higher. Would have gotten filled along here. Again, I would never be entering along this late, especially on a Friday, but that's the end of it. So here we go. going to be just a few seconds over 30 minutes. I hope it was worth your time. And again, my plan is to do additional videos. We'll be talking about the pivotal levels. That's probably going to be my next video, whether that's tomorrow or sometime early this coming week. And then I'll be adding a few others. But these are the things we'll be looking at. I'm going to be doing one on wedges. There's really no wedges in here, but which is unusual. Wedges are, again, where there's 3 attempts to go up or 3 attempts to go down. But that's it. So have a great weekend. I hope this was worth your while. And but this is the what we'll be adding. The II, IOI, and OII will be adding to the PriceBob method, or I should say PriceBob trading plan. So it's the PriceBob trading plan this coming week. I'll be adding this. And again, if you watched the live trading video yesterday, you'll know I'm going to be doing some tighter risk management based on price action after a PriceBob entry. Thank you all. Take care. Bye-bye.